and you want to actually enter war, when you want to, win a war, never start war. So a bit of a motivation, a bit of trying to decipher what Trump has been doing, or the U.S. versus China, so we can actually see what happened, between the U.S. and China trade influence to the global world. So as you can see here, for the last 25 years, China has been actually progressing very well since the inclusion of China within the WTO. And since then, China has been becoming the fierce competitor of the US, especially for trade and economy. But the way the US competing with China is actually very different when we actually compare across administration. For example, in the Obama administration, they are using the so-called multilateral approach, towards China. For example, TPP, Trans-Pacific Partnership. This is actually an economic cooperation within the Indo-Pacific without China. And then we have also Biden, in his administration, covering the so-called Indo-Pacific Economic Framework, which is basically the same thing, multilateral approach versus China. But Trump is different. Trump is a bilateral type of person. And when we see a bilateral approach, the most usable weapon is actually tariff. And then we can also see why Trump is having this kind of delusion, or why he can actually portray himself as a sufficient to start a war. Because as you can see here, one of the possible way, or one of the most possible foundation to win a war is actually food sufficiency. All kind of war, be it a tariff war or a physical war, we can see it through the food sufficiency. So when it comes to food sufficiency, the US is actually above world average. And you can compare it also with China. China is actually just below US in terms of food sufficiency. So this, hypothetically speaking, is actually becoming the very foundation why Trump is actually push themselves to make this tariff war. Although later we know that it's not food sufficiency, it is actually the tech boys that actually disrupting the Trump administration, of having a higher or possible higher tariff, because these tech boys, which is actually the main sponsor of Trump, has been becoming the victim of the Trump tariff himself. So we knew that for 1 week ago, if I'm not mistaken, Trump exempted some of the tech production, to the Trumpian tariff of 145% against China, because the tech boys is actually seeing that this is actually a disruption of their tech value chain to China, especially. But we know the motivation. And then we also know that this Trump tariff is basically the deficit of the US throughout several other countries, divided by the import. Of course, it's multiplied by the import demand elasticity and also the substitution elasticity, but 4 times 0.25 is equal to 1. So we can actually eliminate this, basically deficit divided by the import. So for the case of Indonesia, for example, we have the US deficit against Indonesia is about 18 billion of US dollar, divided by the 28 billion of US dollar US import to Indonesia. So we have 0.64 times 100%, 64%. But Trump also said that he actually giving a discount, yeah, for a country. So best price. Instead of 64%, we have Indonesia 32%. But this 32% is based on the MFN tariff and also bound tariff and also the weighted average tariff for Indonesia to the US. Indonesia is only applying for 4 to 5% of weighted average tariff. It's actually lower than the discount tariff of 32%. And when it comes to this tariff reference, I have my PhD in international trade. I never have this kind of calculation of tariff calculation. This is a trade gap, yes, but this is not a reciprocal tariff calculation, which is in a way that this tariff is a very subjective tariff. Okay, with that in mind, so in order to extinguish or eliminate the tariff, we need to have the zero deficit over here. So zero divided by any kind of number should be zero. So our negotiation strategy is to actually buy more of the US product in order to eliminate the deficit, so much so that if the deficit is zero, so we can have the zero tariff. Which is actually is not in under any kind of reverence. So maybe in Islamic term we call it bid'ah. Yeah, it's actually we don't have any reference or whatsoever of this Trumpian tariff. But Indonesia is here. Yeah, we are offering concession, as I mentioned to you. We are offering to buy more of the US products, for example, defense equipment, and then soybeans, wheat, and so on and so forth, to actually eliminate the deficit. It's not, it's actually better, it's quite advanced. It's not only negotiation, but we are actually offering a concession. So we are here, yeah, compared to the other countries, for example. And then why we are being targeted for Indonesia, of course, because of the deficit itself. I already mentioned to you earlier, but the deficit is the one that is becoming a major concern for the US against other countries. So if we can see, for example, the potential impact for Indonesia, of course, here, even before the Trump tariff, we're already experiencing people being laid off from the labor-intensive industry here in Indonesia. 96,000 of people being laid off since 2024 until February 2025, the latest figure that we got. Trump tariff will actually only expedite the process of having a more people being laid off in this industry. So the forecast of this year, before Trump tariff, is about 150,000 of people to 200,000 of people being laid off. With the Trump tariff, maybe additional 50,000 of people. So it's actually becoming a more problem for us, especially when it comes to the US. That is actually becoming the second largest partner of trade for Indonesia. About 9 to 10%, yeah, the proportion to the overall trade. China is the first and the US is the second. But of course, we have, the latent problem of Indonesia is when it comes to productivity and also wage. Wage compared to productivity is actually not even, it's not equal. So that actually depressed the industry even more. With the Trump tariff, of course, this soon becoming, another big problem for the capital-intensive sector in Indonesia. So we can go to the next. Sorry, I have a problem here. Go to the next slide. Okay. So, okay. For the financial sector, especially for the financial sector, what we have here is the global tension nowadays is especially coming from the Trump tariff, potentially affecting our current account deficit. Previously, the forecast of current account deficit, according to our forecast from Samuel Securitas, is about 1.2% over GDP. But now we are actually maybe facing a more worse situation, the worst situation than before. So 1.5% over GDP for the current account deficit. So it's this figure is in line with IMF projection of current account deficit for Indonesia. And this is actually the very foundation of rupiah. If we see the news, see the data of rupiah, rupiah is now struggling in the level of 16,700 to 16,800 because the foundation of rupiah is actually the current account deficit. Although we are experiencing the 59 consecutive months of trade balance, but the issue here, the trade balance is not sustainable. We are seeing that the potential disruption of the trade balance this year that can actually affect the rupiah's performance. Of course, if the rupiah is being affected, so does the income for most of the people here. The income should be depressed even more. So if we are seeing also for the potential global demand, many of the international institutions, they are having a revision, a downward revision of the potential global demand in 2025. IMF for Indonesia, 4.7% from 5%. The World Bank is also the same, 4.7%, and then 4.8% for the rest of next 3 years. And then for global demand from 3% to 2.7 or maybe 2.5% because of the potential disruption of tariff Trump, for the global value chain, which is actually increasing the potential of inflation coming from the cost of production. So that's actually becoming the most burdensome of all. For Indonesia itself, we're trying to negotiate. As I mentioned to you earlier, we are having a concession, which is a more advanced form if we compare it with only negotiation. And we are amongst the first mover. And we are hoping that when we move first, we can actually gain more benefit, as already also mentioned by the coordinating Minister of Economy, Pak Erlangga, and also the Finance Minister, Bu Sri Mulyani, 2 days ago when they're making a press conference on the negotiation of Trump tariff. For Indonesia, using the Hidalgo simulation, 34% of tariff scenario for US to China is giving us 10 billion of US dollar benefit because we can actually fill in some of the Chinese constraint to the US market. We can actually readily, fill in the gap. And for 100% of tariff scenario for US to China, we can actually benefit, Indonesia can benefit 11 billion of US dollar. So this 100% tariff, we don't have any more than 100% because other than 100%, above 100% is imaginary. As a trade economist, I'm saying that more than 100% tariff is as an imaginary number. Practically more than 100%, you're already, cut your relation with your trade partners if you're actually imposing 100% tariff. What about China? If China imposing 34% tariff to the US, Indonesia only benefit for maybe 1 billion of US dollar, 1 to 1.5 billion US dollar. 34% versus 100% tariff scenario. Why? Because we cannot actually, fill in the gap that the US is actually, when the US is being constrained to enter the Chinese market, we cannot actually fill the US position. Why? Because the US is exporting a more advanced production, so much so that the potential countries that can fill in the gap is coming also from the more advanced countries. So Indonesia cannot compete there. So of course we can still have some kind of benefits, but only 1 billion of US dollar instead of 10 billion of US dollar, if you see from the previous scenario. What about the impact for Indonesia if we fail to negotiate 34% tariff scenario? we can lose 20 billion of US dollar, yeah, if we cannot negotiate the tariff. And then most of this, of course, 20 billion of US dollar, if you compare it with the GDP of Indonesia, 1.3 trillion of US dollars is actually a peanut. But we need to also see that most of the industries being affected to the US tariff is more to the labor intensive industries. So this will also become a problem for Indonesia because we are a labor intensive country. More so, we are seeing that Indonesia can actually fill most of the benefit, yeah, for this tariff. We are also seeing that this through the simulation we can fill in under the firm level, we can actually fill in the gap for footwear, broadcasting equipment, rare earth, and so on and so forth. And we are also seeing that throughout the USTR concerns for the trade policies in Indonesia, for example, the local content requirement. The local content requirement, if you ask me as a trade economist, I'm also seeing that as the local content requirement is becoming a constraint for a productive capacity. If I can show you, maybe later I can actually share you my book, Globalization, Productivity, and Production Network in ASEAN. This local content requirement, when it is too high, this is actually a primary constraint for Indonesia to involve more to the regional value chain. So we need to actually, lower the local content requirements so that we can actually acquire more of the input production, cheap input of production, that we can export more of it. And then another concern from the USTR, we have many concerns from the USTR, but I only zoom in several of the concerns, which is actually basically our economic problem. Import quotas. Import quotas is rent-seeking behavior. It's actually the worst possible trade policy. Yeah. So from import tariff, rent-seeking behavior, the import license holder is the one actually that can actually benefit the most. So if we can have another kind of trade policy, import tariff is just slightly better than import quota, for example. If we are making a deregulation, import tariff is better because with import tariff, the government can still have a part of the revenue coming to the state budget. But for import quota, we have the rent-seeking, corruption, and we have also the benefit, the biggest benefit for the import license holder. So that is why we need to deregulate some of the trade policies, which is actually a primary part of the trade negotiations also. Not only the quantitative measures of the reciprocal tariff, but also the qualitative measures of the most of the inefficiency of trade policies in Indonesia. So we have this deregulation ongoing. So for ASEAN, of course, all ASEAN countries, we pick not to retaliate because this is actually the best outcome for us, the best possible strategy for us. We don't have enough capacity to retaliate, so we are negotiating the part of the tariff. But of course, since Trump is a bilateral type of person, we cannot use WTO here because the Trump tariff itself is not under WTO. We don't have any WTO reference under the Trump tariff. Of course, we have the USTR concerns, which is actually in line with WTO. That is quite a paradox because Trump tariff is not in line with WTO, but the USTR concerns is in line with WTO. This is actually a bit ironic. But we're seeing that, the multilateral approach is actually in vain. The rule-based system is dysfunctional nowadays. So as a financial planner, you all need to brace yourself with the worst possible outcome. Civis pacem parabellum. If you want peace, you need to get ready for war. Yeah. So this is actually one of the most possible outcome, which is war. If you actually check the timeline, historical timeline, smooth Hawley tariff in 1930s is actually one variable before the Second World War II. And then we can also see it from the timeline, the Spanish flu is actually becoming one of the primary variables that is actually pushing countries to compete between themselves, fierce competition, resource competition that allows that push them to have tariff. With this tariff, evolved to World War II. So we need to be careful. We need to get ready. So if we compare between US and China here, US and China in terms of military power is quite on par. The one that soon becoming the key determinant should be Russia here. Interesting part about Russia, Trump is not actually putting any kind of tariff to Russia. So if we put Trump reciprocal tariff in Russia situation, they should have 80% tariff with a discount 40% tariff, but it's not under the table. It's not under the Trump tariff announcement in April 2nd. So how is it? How Russia is not in the table, but we have a country full of penguins have this Trump tariff, but not Russia. We have also the U.S. Aid on the Ukrainian government is now being halted. Of course, this is also the X factor. I think Trump is trying to, persuade Putin to, siding with the U.S. But at the same time, we also know that Xi Jinping is a very close friend with Putin. So in a way that, hypothetically speaking, Putin, will become the key determinants for this potential war. Okay, either Putin will go with China or with Trump. How about the EU? EU is still under status quo because they are in dilemma. They cannot go with the China, because ideologically speaking, China is close to Russia, and then in a war they cannot actually side with the eastern part. But to the other part, the western part, the US is still also, they're imposing tariff even to the EU. But as we check into the historical timeline, the EU is actually quite indebted with the US as the Marshall Plan of the US coming to the EU post World War II. So they are also seeing that against the US is not a choice. So EU is under a status quo. So key determinants should be Putin. And then another possible scenario is Putin is the one that actually created the physical war. Maybe Putin in the future will become the key determinants to end this tariff war, because maybe with Trump with Putin, they are very close. Xi Jinping and Putin, they are also very close. This triangle relation should be maybe the X factor of actually ending the tariff war. I think that is all from me. I hope this is positive for you guys, and to also to calculate the financial sector, especially for the individual, from the individual perspective, how we can actually brace ourselves for a potential worst case scenario. Thank you. And maybe if you want to have a discussion, I'm here to answer.
Okay, thank you so much, Doctor. I'm so sorry for being late, and I think we can conclude the main point that from your presentation. The first one, we see that based on your data that provided, we see how tariff actually influencing how the wage, how the food securities, and also global demands, and how it also influencing countries all around the world. And the second one, we see that the strategy between two main countries that inside the war actually influencing Indonesia itself. And we see that some of the government strategy or response towards tariff scenario. And I would like to invite the participant from this event to join us to ask a question if you have, maybe for 3%, because we must leave the room after this presentation, please.
Yes, Dr. Fitra, I would like to ask something. Dr.
Yes.
Ratna? Yeah. Yeah. No, it's as I mentioned that I'm on the capital market as well, but not as expert as you are. Just would like to ask little questions on how is the market reactions on the Trump tariff, and what are you forecasting, or what Samuel forecasting in the future?
Okay, so this is a very good question. Yeah, because we are seeing a very uncharted territory. Yeah, so we are seeing that the market is responding very negatively nowadays, especially when you're seeing the dynamics in the USTR, US Treasury 10-year. Yeah, so not USTR, UST 10-year. Yeah, the dynamics is quite challenging, because at first, as you can see from the April 2nd, the yield rate of the US 10-year Treasury is actually becoming a downward sloping, meaning that the demand is there coming from the equity market, because most of the hedge funders were seeing that Trump tariff is slowly becoming the major disruption of the equity market, because the source of growth is very limited. So they're going to transit portfolios, which is actually the US 10-year Treasury. So the demand is was increasing at first, but later we also know that the Fed is responding very negatively. The Fed, we're seeing that this Trump tariff will be coming, the primary source of inflation in the US. So much so that they are very reluctant to decrease the Fed fund rate. So it was expected that the Fed will cut at least twice of the rate this year. But with the Trump tariff and with the potential inflation, rising inflation this year, they will probably stay at the current rate, or maybe worst case, they will actually increase the rate. So with that, the US 10-year Treasury yield was actually also increasing, very rapidly. That also, maybe pushing Trump to halt 90 days of tariff, because he is also saying that if the US Treasury yield is increasing with so much debt that US has been doing so far, they will be coming, they will face a problem in the future, because the cost of financing will be very, very high in the future. So trading halt stop the US yield rate to raise even more. But at the same time, we are also seeing that since the demand for safe haven assets in the bond market in the US is fading away, people now are collecting globally. People are collecting Japanese yen and also gold. As you can recall, the gold is now rapidly increasing globally, and it is expected that the gold will reach 4,000 of US dollar per troy ounce. So this is actually a very interesting. As a financial planner, you need to choose whether to collect gold or to collect money market instrument. For example, here Japanese yen is also becoming the safe haven, and so on and so forth. But later, since Trump has becoming in his sense, coming into his senses, so 145% tariff against China, Trump is seeing that this is too high. So slowly, we are also seeing that the tension in the US market, especially in the bond market, slowly fading away. We are also seeing that the US 10-year Treasury, the yield is now becoming, less and less. And that is actually becoming, very positive for the Indonesian market as well. Because empirically speaking, when the yield rate of the USD 10-year decreasing, the bond market here in Indonesia, the yield rate will be coming also decreasing as well, as the demand is there. Yeah, we are seeing that we have a potential demand for bond market as well as for the equity market, especially when Indonesia in the position of concession is an advanced form of negotiation. We are not only doing negotiation, but we are already offering a concession. So in the Indonesian market nowadays, we are seeing a very positive result, in the equity market, both in the equity market and also in the bond market. But if you're asking me which one to pick, when it comes to stock, maybe since this is a Sharia financial planner, you can see, for example, BRIS, or Bank Syariah Indonesia. Bank Syariah Indonesia now is actually pretty much affected with the overall banking situation, which is actually quite progressive. The equity market is now being taking positively with the very positive result in the banking nowadays. So that also becomes maybe a very positive pick, for you as a financial planner. For the bond market, we are seeing that the shorter tenor as a more defensive strategy, for us when it comes to the dynamics of the global tension nowadays. So we are seeing that if you want to collect bonds, please collect bonds that is actually less than 10-year tenor. More than 10-year tenor, you can collect it as well, but we're suggesting as a strategy the tenor of 16 years and also 20 years if you want to also collect bonds. But in the period of uncharted territory like this, bond market is actually always the best choice. Fixed income market.
Thank you.
Thank you. I have okay, please. Any other participant who want to ask a question?
This is interesting, Dr. Fitra. I would like to speak to you in person later on.
Okay, later.
Yeah. All right. Since he's leaving, we can take picture together.
Okay. Please, everyone, to open.
Yeah, you can use our virtual background if you would like to. We have the virtual background in the perhaps the Dimas can post it. Okay.
Okay, let me count.
I would like to open cam.
Okay, please open camera, everyone. 1, 2, 3. Okay, this is the first page. Now the second page. 1, 2, 3. Okay. Okay. Thank you so much, Dr. Fitra, for joining us, and hopefully we can meet in another event, inshallah, or in person. Thank you so much. You may leave if you have another agenda, I believe. Thank you so much for joining us.
Okay, thank you. And see you again.
Yeah.
Assalamualaikum.
Okay, now we would like to directly invite the second speakers. He is our Dr. Muzaffar bin Abdul Halim. That's the I have it. This is his CV. Okay. He's got the education from the University Huddersfield Diploma for Accounting and Finance, and Abel Wolf College of Accountancy and William Wolf College of Accountancy for Chartered Certified Accountant, and University Technology Mara, ACCA as Professional Accountancy. She has experience in financial controller, CFO from Tahan Insurance Berhad, GM Business Development, Vice President of Finance and Corporate Finance, and etc. behind. Okay, we would like to now he is the founder of Biz People Network and Chief Strategy of VB Energy SDN Hub 2024. Okay, without any further ado, please, Dr. Muzaffar bin Abdul Halim, the time is yours.
Okay, Assalamualaikum semua. Trying to share the screen.
There's a very bright noise behind anyone.
I've shared the screen.
Yeah,
Yes.
yeah, it's clear.
Can you see the screen?
Yes.
Yes, we can.
Okay. All right. Assalamualaikum and good afternoon, everybody. My name is Muzaffar. I'm a chartered accountant by training and by career.
Brother
I've been
Muzaffar, could you please check the sound?
Okay, it's on. Can you hear me? Should I speak louder? Can you hear?
Yeah, I think it's less noisy now.
Can you hear? Is it loud enough?
Yeah, loud
you
enough.
may speak quite loud.
Quite loud. Okay, it's too loud.
No, it's enough.
Okay. All right, I'll start again. My name is Muzaffar bin Abdul Halim. I'm a Malaysian. I reside in Kuala Lumpur. I've been working for more than 30, 40 years, and I've worked in not only in Malaysia but also in Thailand and Indonesia. I had been working in Indonesia for 6 years in the past. Industries, very diverse industries. You name it, more or less I've been in it, including private equity. What I am presenting here is basically, I thank you, Dr. Fitra, the Professor Dr. Fitra just now for giving the micro overview of the impact of Trump's tariff globally and then for Indonesia. So what I will do will most probably naturally, I will flow through from there and going down from an overview of the global impact, the regional impact, and then down to Indonesia, and from Indonesia down to sectoral impact. And then we will see what are the options for financial planners and also your potential clients or your existing clients can do with respect to the tariffs introduced by Trump. Okay, let's start. Okay, the first slide is basically an introductory slide. Trump's tariff policies, global and Indonesian economic impact on financial planning strategies. So the focus here is basically on financial planners and your clients, based on my perspective.
Doctor,
Okay.
your slide hasn't moved to another.
I haven't moved it yet.
Yeah.
Okay. So I'll move the slide from one to another. Is that okay?
Yeah.
Okay. Just to get the context and the flow, I have 6 sections here for the presentation. Number 1 is I will describe as an overview the Trump's tariff policies, and then how that impacts global and ASEAN economic, and then down to Indonesia with respect to 3 aspects: trade, currency, and your gross domestic product. From there, we will look at, we will analyze who are the winners and losers sectorally within the Indonesian economy. And from there, we will see, okay, let's, from those data that we are going to discuss, how can financial planners react or do to help your clients to ride these uncertainty, confusion, and chaotic scenario introduced by the Trump tariffs. Then we will summarize with key takeaways. Okay. This is just complementing what Dr. Fitra has basically described in quite detail. I have basically drilled down into 3 areas. What is the Trump's tariff all about? Initially he introduced 60% tariff to in China, 32% for Indonesia, and 24% for Malaysia. Then he had a second thought. He says, let's pause this for 90 days. In the meantime, the tariff is being reduced down to 10% for everybody except China. So now what is happening is everybody is now waiting for what happens after the 90 days. Will it, for Indonesia, will it go back to 32%? Or for Malaysia 24%, or what? Maybe we don't know, right? Apparently Trump changes his mind quite frequently over a short space of time, so we don't know. But as planners, we do have to plan for the worst case scenarios, whatever the case is.
Doctor, please full screen the slide.
It's not full screen.
Yeah, it's not
Oh,
full
okay,
screen.
sorry. Is that okay?
Okay.
Okay, sorry about that. Is it clear now? Yeah. So Trump's objective, why he did this, basically in his mind, by introducing these tariffs, he hopes that under the MAGA, Make America Great Again, he hopes that he can protect U.S. industries and bring a lot of these industries which they have actually exported away many years ago, particularly to China and Asia, back to US. But I'm not sure how that can be achieved and whether that can be achieved within a short space of time while he is still president. I don't know. And he also expects to reduce trade deficits by using tariff as a weapon. Then again, if you ask a lot of economists, that's a bit, it's something novel, which economists, generally speaking, are still digesting whether it is the right strategy to adopt in the long run or not. ASEAN focus, of course, we're talking about Indonesia. Indonesia's impact is quite significant. So is Malaysia, because primarily ASEAN in general are basically the supply chain alternative to China, because the next lowest cost of production other than China is ASEAN. And because ASEAN also have a lot of natural resources, 500 to almost 600 million in population, and it has many types of industry that it can and resources that it can sell to US. In fact, ASEAN sells a lot to US. Of course, why when he introduced the tariffs, it will definitely create disruptions, ripples, generally disruptions. Whether that disruption is good or not, that remains to be seen. But for sure, it changes the dynamics of the global economy in general. The tariffs introduce trade wars, and it escalates the risk because of these trade wars. US wants China wants to impose huge tariff to China because of the huge trade deficit between US and China. So he hopes that with these tariffs, US trade deficit can go down substantially vis-a-vis China. But of course, it will spill over to ASEAN, ASEAN being the alternate supply chain sources if industries move out of China. Supply chain shifts, that's what I mentioned just now. Now, the most attractive alternative from China are Malaysia, Vietnam, and Indonesia, particularly Vietnam. So, when you shift, then I don't know how fast this can be shifted because production facilities does not shift overnight. It takes a long time to shift. So whether Trump can achieve what he wants to achieve by inducing these supply chain shifts or not. And then commodity price volatility. Yes, palm oil, nickel, semiconductors are all affected by the tariff. More so with respect to palm oil, Indonesia is much more impacted than Malaysia. Why? Simply because more or less about more than 80% of US import of palm oil comes from Indonesia. Yeah, Malaysia's export to China to US is only about 10%, but Indonesia's share of palm oil imports from US to US is 85%. So if there's any tariff impact, the biggest impact would be on Indonesia as a commodity. Okay. Now we go down to Indonesia. So let's take stock. We'll do a bit of benchmarking. I have here, I measure four key metrics. I looked at GDP growth. I looked at foreign currency, rupiah versus US dollar. I also looked at export to US, and I also looked at the general key risk of introduced by the tariff. Before the tariff was introduced, basically 2024, GDP growth, Indonesia's GDP growth was 5.2%. Rupiah was 15,500 US dollar rupiah to the US dollar, more or less. Exports to US, 25 billion. The key risk, not many key risks because nothing substantial has changed over quite a number of years. So FDI has been quite stable for Indonesia. But once the tariff was introduced, disruptions, and as a result of that, analysts and economists predicted that Indonesia's GDP growth will be substantially slowed down to about below 5%, maybe between 4.7% to 5%. That's quite huge, just because of the tariffs. And we do not know what happens after 90 days. So, worst case scenario analysis is quite crucial at this point in time. Rupiah now, it's even the exchange rate now, I think it has passed 17,000 if I'm not mistaken. And that's even worse than 1998 during your Christmas. Export to US is expected to slow down from 25 billion to around 22, 23 billion. That's more or less a reduction of about 10%. 10% in export is quite a lot. Key risks, because of all this, GDP growth, lower GDP growth, rupiah going down in value, and lower exports to US, the expectation is that there will be capital flight out of Indonesia and weaker consumer demands because of higher prices. Okay, what you can buy given the same amount of money is less as a result of the Trump's tariffs. So a lot of concerns that Trump has introduced for Indonesia, which I think financial planners need to take stock and need to devise strategies and advice to your clients. Winners and losers within Indonesia's industry. For Malaysia, Malaysia is big on semiconductors and electronics and electricals. So anything that has to fly out or move out of Indonesia, of China, will most probably move into either Malaysia or Vietnam with respect to technology and electronics, which Malaysia is heavily investing on. Domestic consumption, historically, Indonesia is very, very strong on domestic consumption. and it remains strong. It remains the bastion, or rather your strength, that will not go away. So that's a very huge plus point for Indonesia, domestic consumption. And within domestic consumption, I think financial planners and your analysts and your fund managers should be focusing on Indonesian retail, healthcare, and infrastructure. Losers, commodity expectors, palm oil, nickel, rubber, because like I said, I mentioned palm oil, a substantial portion of your export goes to US. So you will be impacted more compared to Malaysia, being the second largest palm oil exporter. Malaysia's traditional market for their palm oil is basically Asia, India, for example, not US. US only 10%. Import-dependent industries like automotive, electronics, if supply chains disrupted. So if supply chain is disrupted, then it will generate either shortage of supply, or a downsizing of the industry as a whole. So financial planners should take this into stock and have a conversation with your analysts and your fund managers. How to strategize your client's portfolio with this in mind. Financial planning strategies, adapting to tariff risks. Okay, what can financial planners do? What can investors do? What can high net worth individuals do? They can do hedging. They can do portfolio adjustments, rebalancing. They can consider investment in real estates and alternative investments, for example, gold. But don't forget about silver. Silver might be also something that is worth considering other than gold, because gold now prices has gone up significantly. Business owners should relook at supply chain diversification. Maybe not from China, maybe from other countries, or even locally. Develop your supply chain locally. You need to do that. Currency and inflation hedging. Okay, we expect inflation to increase, to rise. Currency we expect to go not in favor for Indonesia. For Indonesian rupiah holders, you should diversify. Well, the standard advice would be to diversify into US dollar denominated assets, but do consider that we still do not know what will happen after 90 days, and the impact of BRICS. With BRICS is introducing an alternative to SWIFT settlement system and introducing their own currency. So even if you want to diversify to US dollar assets, you still need to be very vigilant and time it properly in case alternatives to US dollar becomes more dominant. Consider gold. Of course, gold has been traditionally, religiously, culturally one of the best hedge against devaluation. Crypto is a perception game. So high risk, but if you get it right, you'll get it right. But if not, it's quite dangerous. You can in a limited way use it as a hedge against inflation. But your analyst will be able to say that better with more data available. Portfolio adjustments, of course, you have to change. You might want to change from Indonesian's investment in Indonesian rupiah to other currency, for example, US currency investments, global assets, US assets rather than Indonesian assets. The type of industry, palm oil. Maybe palm oil you might not want to. You might not want to, be high on plantation, but instead of moving out of plantation, you might want to consider going downstream into further downstream into food, into chemicals and all that. You know, that uses palm oil as a raw material. Maybe that is one way for you to diversify from upstream to downstream, rather than from one industry to another industry. Increase domestic focused investments. Okay, like I mentioned just now, one of the potential winners in Indonesia will be retail, infrastructure, and healthcare. That won't go away. Healthcare will stay. Infrastructure needs to be invested, particularly Indonesia being a very large country. Consumer goods, domestic demand will support consumer goods that are produced in Indonesia, which you are strong. Indonesia is very strong there. Real estate and alternative investments. Okay, real estate, of course, real estate usually doesn't go down in value. But I'm not sure about Jakarta being with the consideration of moving your capital city to IKN and Jakarta being experiencing the risk of sinking. So you need to identify the right locations for your property real estate investment. Alternative, private equity. So maybe financial planners might not want to advise your clients to consider private equity, because usually that's not part of your portfolio. But high net worth individuals might want to consider that private equity and invest directly via investment managers into this kind of industries. I have been in private equity, and given the right scenario, given the right analysis, it could turn to be a very sound investment over a period of minimum 5 years and ahead. Business owners, for business owners, of course, you need to consider supply chain diversification. You can't just depend on China, because before this, China has always produced cheap products and services. But then again, with these tariffs, you might want to reconsider to find other sources of supply chain. China, Vietnam, for example, and maybe locally, and maybe Malaysia. We don't know. You need to do some analysis here. Yeah, leverage Indonesia's domestic market, less reliance on US exports. That's always the case. When Indonesia has got some issues economically, what helps you, what give you the platform to turn it around has always been your domestic market. That's traditional for Indonesia. Okay, next. Okay, here I'm showcasing a simple case study of one of your, for example, your client, which has basically let's say he has a $2 million portfolio. Okay, what does he do? Okay, let's say now the $2 million portfolio in Indonesia, he has invested 40% of that in Indonesian stocks. 30% of that he keeps in cash. You never know, for urgent needs, and 30% of that in property. Maybe, I don't know, maybe that's the general weighting of a portfolio that you can, at the moment, that you recommend to your clients. But post tariff adjustments, you need to reconsider, you need to rebalance. Of course, let's for example shift from 50% mining stocks, commodity, raw material, into healthcare, into digital economy, exchange traded funds, instead of stock market and bonds. Exchange traded funds, you might want to consider that as well. Explore, diversify, diversify away your risk, and increase US dollar holdings. You might want to explore other currencies as well, given the current geopolitical scenario, rubles, renminbi. But at the moment, of course, US dollar is very strong. Treasury bills, global index funds. But then again, after 90 days or in the near future, do have a lookout of the developments of BRICS, development of the multipolar geopolitics, geoeconomy, and you might find that the recommendations might change. Instead of US dollar, or from US dollar alone, into a basket of strong currencies. Explore Vietnam, Thailand manufacturing linked private equity. I had been involved in Thailand manufacturing linked private equity, and they are very strong. As a manufacturing hub they're very strong, and it's something that you might want Indonesian investors and financial planners might want to consider when you diversify your portfolio in order to diversify away your risk. That's very important, I think. All right. Because of the time, so we have reached the one of the final slides. Key takeaways for financial planners. What's the takeaway here? From this short presentation. Okay, tariffs are disruptions, definitely disruptions, but disruptions create opportunities, not just threats. You have this saying, the glass is either half full or half empty. Depends how you look at it. Whether you are risk averse, how risk averse are you? If you are very, very sensitive to risk, then you will see the glass as half empty. But if you look at the other way around, that you are the one who likes to seek opportunities, then the glass is half full. So let's find out how to fill up the glass further. So it's pros and cons. Planners who thrive will be those who act fast. You need to act fast, and you need to be proactive. You need to monitor the 90-day window, what's happening. You need to diversify smartly, your portfolio rebalancing. You really need to do that. Talk to your financial planners, talk to your financial analysts and your fund managers, and then devise a recommendations to your clients. And make sure you always keep your clients informed, because things are moving very, very fast. So late information is useless information. You can only use information when it's timely. Of course, strategic diversification. This is quite strategic. Yeah, it's not something tactical, because what Trump's tariffs will do, whether you like it or not, is strategic. What will happen is that if Trump stays with his tariff policy, there will be major changes in supply chain. And supply chains, once you change, you cannot change back within 1 or 2 years. If you change, it will take maybe a few years to settle down, and maybe another 5 or 6 years to really stabilize itself. And if Trump changes his policy again, then will be another disruption. You need to reanalyze everything all over again. Right? Okay. The four things that you need to, the four activities that you need to do would be to monitor. You need to monitor the next 90 days, which is very critical. US-ASEAN trade talks. I think there are a few events, talks, or other decisions that are being scheduled within these 90 days that you need to monitor. And then you need to rebalance your portfolio away from tariff-sensitive sectors, exports, focus on domestic domestic demand, and look at for industries that can able to shift their supply chain into more favorable sources. Then you need to hedge with respect to your currency and perhaps also inflation. Yeah? Hedge against rupiah volatility. At the moment, it's even worse than 1998. You have surpassed 17,000 rupiah. You need to look at that. And now the standard flight to quality when it comes to volatility like this would be going to gold. And Dr. Fitra also mentioned debt. You can go into debt, but the best would be gold. But if you think gold is already too high, you might want to consider silver. Yeah. So global funds is by definition is globally diversified. So it spreads risk globally. And then prepare. You need to prepare your clients for slower GDP growth. Slower GDP growth, that means less money in your pocket to spend. So advise them to be more careful with their spending or change their pattern of spending on the back of increasing the weighting of cash or near liquid assets in their portfolio. I think it is also something that financial planners might want to consider in advising your clients, that it is quite strategic to have at this point in time during these 90 days to have cash or near liquid assets in case there is substantial opportunity that you can quickly allocate some of your liquid assets to very profitable investments. You never know. Okay, so I guess that is my presentation for today. A little bit about Al-Hijrah. I think there was no information about Al-Hijrah now. So Al-Hijrah is, I think, something we provide some or similar services to IFPA, but we focus on training and consultancy. And we serve banking industry, we serve the financial institutions, and we're very passionate about small and medium-sized industries. Transformation, turnaround, growth, business processes, managing risk, managing finance, ESG, and sustainability. This is something that we provide as a service and advisory. Sharia-compliant business practices, yes, we do that. And we also have this model where we offer timeshare C-level services. CFO for SME, CRO for SME, C-suite timeshare. This concept is where, you know, an SME which can afford CFO level skill set might want to hire a CFO level skill set on a timeshare basis. For example, half a day per month per week, or 1 day per week, 3 days per month, that can be done. So that's what we do. And that's the end for me. And I say thank you. So any shortcomings, I apologize. And anything that's good, it comes from Allah. Thank you very much for giving me the opportunity, Professor Murniati and IFPA. Thank you very much.
Thank you very much, Dr. Muzaffar. And we would like to invite any participant who curious to ask the question before I read the question from the chat. No one? Okay. This from Ibu Ida Rosida.
Can you speak louder, please?
Oh, sorry. I think I need to get closer. From your point of view, can Indonesia take the economic benefits from both sides, USA and China? What do you suggest, and how Malaysian government take action on the tariff war between the two parties? Is there any opportunity can be taken for the Islamic financial institution industry in the middle of the war tariff? That's the question.
Well, that's not one question.
That's actually three.
Okay, I'll try to break it down. Okay, first thing is about Indonesia, right? And how can Indonesia leverage with respect to China's the introduction of tariff to China? Correct? Is that correct? Okay.
Yes.
I think there is a planned negotiation between Indonesia and US to address this. I think you need to. I think beforehand, I think Indonesia is doing the right thing by introducing biofuel to increase the local utilization of palm oil. I think that's very good. I think because of that, you know, you might have substantially reduced the impact of the Trump tariffs over palm oil. So what else can they do? Yes, diversification. You need to find out what Indonesia buys from China. It will not, the Trump tariff will not be impacted because it's only what you sell to US. But what you buy from China will not be impacted. But if you want to sell it to US, you know, then it will be impacted. What else can Indonesia do? I think the response time of whatever actions that Indonesia wants to take, in comparison with Vietnam and Malaysia, the legal infrastructure, the 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 ease of doing business in Malaysia and Vietnam, I think, is much more conducive to investors compared to Indonesia. Okay, that's the perception, especially especially on legal. You know, the legal infrastructure in Vietnam and in Malaysia is much more stable, and you know, the opinion is that it is easier to put reliance or dependence on the legal infrastructure of Malaysia and Vietnam compared to Indonesia at the moment. That's the perspective. In other words, country risk. So if I think Indonesia can address this issue and alleviate these concerns, the country risk concerns with respect to legal ease of doing business, then you would be putting yourself in a position where you can respond either proactively or reactively much faster against the Trump tariff or whatever threats to your economies. What's the other questions? What are the other questions?
The last one is about is there any opportunity can be taken for Islamic financial institutions?
Islamic financial institutions. Well, back in the early 2000, I was the I was working with the private equity, and we introduced the first Sharia-compliant private equity in Malaysia, anchored by three entities: Navis Capital Partners, which I work for, Bank Bumi Putra, and Bank Muamalat. So together we formed the first Sharia-compliant private equity, and it so happened that I was the first Sharia compliance officer. The opportunity at that time is not cheap. You know, there is a Sharia advisor. His name is from Pakistan. His name is Professor Taki Usmani. He coined the term of COBM, cost of being Muslim. So in the context of finance, so anything that is Islamic in nature with respect to financial products is just much more expensive than the conventional products. But now it's not because of the generally accepted by the world about in Islamic products like sukuk and whatnot. So I think the opportunities would lie in direct investments like private equity. Yeah, private equity would have a bit more flexibility in identifying investment opportunities by virtue of okay, when you want to invest, the best thing about one of the best thing about investing in a Sharia compliant way, you don't need to ask where the money comes from. It's not mandatory for you to ask where the money comes from. What is mandatory is what you use the money for. Yeah, you do need questions where did your investors get their money from? But you need to question and you need to get Sharia supervisory approval on how you want to invest your money. For example, let's say a business which borrow money in conventionally, you have riba, right? And it has a certain small portion of non-Sharia revenue. So with Islamic private equity, you can buy over, you can acquire these assets and propose to the Sharia compliance, a Sharia advisory board, that you want to turn this not very Islamic asset into a very Islamic assets. For example, you can convert replace the conventional loans that they have in the balance sheet into Sharia compliant loans. Yeah, and also diversify away or sell off the non-compliant aspects of the business away. So this is something, as a discipline, that is something that Sharia investors or Sharia fund managers can, to me, it's an asset. You are able to pull your assets, whether it's from non-Muslims or whether it's Muslim, it doesn't really matter, and create a much bigger pool of investment funds to invest, and you can become, the fund managers can become catalysts to drive the Indonesian economy in a Sharia compliant manner. So I think in short, yes, you can, but my recommendation would be look for Islamic private equities. Is there any questions in there? I think there are 2 or 3 questions.
Yeah. From Burida.
Yeah.
I think that's all the question.
Only 2 questions.
There is
Oh,
another question, I guess, after.
Sorry? I can't hear you.
Which one, Bu?
Abu Rida. Yes, Ibu Rida.
No, I mean, there is another question from Sir Sirajuddin.
Oh, yeah. We have another question from Mr. Sirajuddin Arabzada. Do you think current tariffs can help US in the long run? And why did US only targeted China, where they have benefits in terms of cheap products and production?
Yeah, from my perspective, I think you need to go back quite a number of years before, where there was a certain point in time, US exported a lot of their costs to China in order to take advantage of cheaper production. For example, the classic example would be Apple iPhones. Yeah, most of the components are produced in China. Even now, there is controversy that luxury goods like handbags, Hermes, and all that are all manufactured in China at a very, very low cost. So now Donald Trump wants to reverse that, because the long-term impact of that shift from America to China is that the industry in America, the manufacturing capacity are all in decline or reduced, because they can't produce cheap, they can't produce competitively. So now what he wants to do is he's using this tariff, whether he's right or wrong, he's using this tariff to persuade production facilities to return back to China, to US, and hopefully, drive employment, drive the American economy back to where it was before, just after the World War II. So long-term impact, I think lessons learned from Asia, from China, and from the BRICS nation, I think there's already a shift because of BRICS and other nations. There is already a shift from unipolar perspective to multipolar perspective. Means to say, instead of just relying on US dollar as the currency, global currency, then very soon there'll be a choice of other currencies that you can use to do your transactions. So the net impact is that you do not need to rely on US dollar every time, which you are at the moment. You have choices. And if you can see, US dollar does not have any backing other than confidence. It's a legal tender backed by confidence. But I think there are currencies, I think BRICS currency are going to be backed by gold and blockchain technology that will be introducing a very strong and very trustworthy currency as an alternative to US dollar. Even now, China has done transactions to buy energy resources in renminbi instead of US dollar. So there is a shift. Long-term wise, I think is very you need to consider doing business with other countries, especially Asia and ASEAN. You need to do that because US dollar is, to me, in my opinion, the jury is still out. Because why? At this point in time, US has got what, 34-35 trillion dollar debt, yeah, and is paying annual interest on that debt of in excess of 1 trillion US dollar. So, and the way if they continue to print money, then that will not go away. So if that happens, the purchasing power of the Americans would be significantly reduced. They are not able to buy cheap products from China anymore because anything that comes from China will be more expensive. And if they produce, they buy things from their own domestic production, it's also going to be very expensive. And if they sell products to Europe, it's not cheap. So long term is, I think you need to consider diversification on the global perspective. I would say, put some money in US, fine. Put some investment in US, fine. But consider China, consider Vietnam, consider ASEAN, consider Russia. Look at where the food sources are, wheat, grain, where they come from, and maybe you want to consider that when with respect to food security. Those things. Indonesia is very reliant on wheat. Where do you get your wheat for your Indomie and whatnot, right? So food security, you might want to invest on food security and technology. The cheapest technology now are from China, unfortunately. And artificial intelligence has been commoditized by China, for example. Yeah, and China will soon be at par with respect to semiconductor technology. In terms of the military, if you look at the analysis now, the technology being churned out by China with respect to military weapons and whatnot are basically now on par with US, if not better. So all in all, US is not the only power in the bloc at the moment. There's China, there's Russia, there's, if ASEAN manage itself very well, ASEAN will be a global power as well within the South Asia context. So yes, diversification is the key. You need to look at, do not just look at US dollar, look at others as well, look at gold, and perhaps, preemptively look at silver, preemptively look at, investing in downstream with respect to commodities like palm oil. Palm oil are basically used to produce consumer goods. So you might want to look into consumer goods, which is part of the driver to the strength of the Indonesian domestic market. I hope I answered that, in my own way. So I can say all this because I've been the most part of my life is I've been managing businesses. I've been turning around businesses. I've been managing the financial and general affairs of the businesses, and I've also been outside when it comes to private equity. I've been looking at businesses from the outside. What I look at is the same: values, potential, prospects, SWOT analysis. So what I say here is basically a mix or match of the insides and outsides. But be careful. The chaos, the disruptions, the confusion introduced by Trump, and this 90 days window would be something very crucial that you need to monitor very, very closely. I hope that answers.
Okay.
Yeah,
Thank you so much, Dr.
Sirajuddin. Yep.
Yeah, from
Where are you from, Brother Sirajuddin?
Where is Sirajuddin?
you are still mute.
Belong to Turkey, currently studying in IFPA University, doing my master in economics.
Sirajuddin is Indonesian?
No, I'm not in Indonesia. Yeah, right now I'm in Indonesia, in IIII University, Universitas Islam International Indonesia.
Ah, okay. All right. Thank you for your question.
Thank you, sir. Thank you. Thank you for your nice answer.
But I think, Brother Sirajuddin, about the China's products from China. I mean, everywhere in all the countries. So, China is giant. So it's a giant country with all the factories or type of factories they have. It's competing with Vietnam, Bangladesh, Sri Lanka, India, Pakistan, all these, including Indonesia, to produce a cheaper cost of products. Even Indonesia people are living in Indonesia towards Vietnam, Cambodia. So you can see, in a branded or signature shops in the US, in the UK, what are actually the labels written? Made in Bangladesh, made in Vietnam, from Japan. All the products in Japan are made in other countries. So, but here China products, I think Trump has been uh, holding his anger for sometimes, and as what he said, uh, uh, cheap product, yes, but then you he is taking that opportunity, Brother Sirajuddin. He's taking the opportunity because China, of course, cannot just uh, forget about the big market in the US, right? So, like it or not, whether through legal and illegal shipment, China's product from China will always enter US. I'm not sure. This is just my other point of view. What are your specializations, Mr. Judith?
In economics,
Economics. So you are originally from
from Turkey.
Turkey.
Yeah.
All right. Okay. Yeah. So yeah, that's. Are you joining this conference in people like you?
Yeah, from IIII.
Oh yeah. Okay. So yeah, that's all my.
Thank you. Thank you, ma'am.
This is one last question that we can give for you today. This is from Naila Novita. Currently, Chinese blended goods are increasingly rampant through online markets at low prices. What should we do, whether we hold money or shop for Chinese products? And what is the effect in the future with the Trump's tariffs? That's her question.
This is this is an
This is
interesting
interesting.
question.
That question is for me.
Yes.
Okay. Well, online shopping, you can't avoid it. It will happen. It will be part of the way of life, simply because it's easy. Yeah, it's easy, and whether you want to pay for it, you want to somebody helps deliver it to you. But of course, products from China are cheap. I think the challenge is for you to buy quality products. Whether it's quality products from China or whether it's inferior quality products from China, they're all cheap, right? They're all cheap. So you need to have a skill set or somebody or an institution that have the ability to separate the quality goods from the inferior quality goods, in order to protect the Indonesian consumer. I think you need to do that. You have Temu, you have Shopee, you have Taobao. Now Taobao is aggressively marketing itself. You have Alibaba and all that. A lot of that. Okay. During my time in private equity, there's a lot of China machineries and equipments up for sale, available in the market, which are very, very cheap compared to established equipments from Europe, especially Germany, which is basically any equipment from Germany, you can rest assured it's very good, of high quality. But anything from China, either if it's too cheap, is either it will break down next week, or it will create other issues and it's just not good. It's cheap, but it's that, you know, it's very short expiry date. so so that's my experience with during that time in early 2000. But now BYD vehicles have, you know, has introduced a very strong challenge to Tesla, right? And handphones, China's Huawei has introduced very competent handphones with very competent technology to fight against the technology from US. Weapons, the ease of doing business. TikTok, for example, TikTok comes from China. TikTok is one of the biggest online platform, multi-use online platform. That is something that US wants to take over, or at least the American portion of TikTok. So yes, you need to really consider buying from China, but you need to be careful. Only you need to have an institution to filter and to protect your consumers to buy only quality goods.
That's the answer, Ibu Naila.
Yeah,
But
I hope I
Naila,
answered
yeah,
it
yeah.
competently.
Is that enough? Hopefully that's enough for the answering your question. And I would like to, okay, that's enough. Thank you. I would like to summarize. Actually, I take a lot of notes. It's like a message from a senior to junior, like, but I would like one that's like hit me hard, right? Uh, to see that this war actually has the positive, we need to see the positive effect of this war. Like for now, we see that only the negative effect, like how Indonesia might be affected, how the strategy, it's like we need to do something big until we can out from this war. But after hearing that tariffs is disruption, but create opportunity. It's like creating, oh, there is another side of the tariffs, and we have to acknowledge that as well. Thank you.
Correct.
Thank you so much for that.
Welcome.
And this is the end of session. I think I would like to hear more actually, but the time is not always right. So we would like to invite everyone to open the camera so we can take a picture together.
Hmm.
The slide is still on the screen.
Oh, okay.
We would like to take a picture. The first slide, 1, 2, 3. Okay. The second slide, 1, 2, 3. Okay. Thank you so much. Thank you so much. Now we would like to give the token appreciation for the speakers today. Mas Dimas, are you there? Okay. I think Mas Dimas
Okay,
not
wait,
in
wait a minute.
okay. This is for Dr. Fitra Faisal as speakers for our webinar today. And the second slide, please. For Dr. Muzaffar.
Thank you.
Yeah, thank you so much for the message, for the inspiration, sharing the positivity with us. We would like to close with Hamdalah, Alhamdulillah Rabbil Alamin, and also the Kafaratul Majlis, Subhanakallahumma bihamdika, asyhadu an la ilaha illa anta, astaghfiruka wa atubu ilaik. Thank you so much everyone.
Yo.
Assalamualaikum warahmatullahi wabarakatuh.
Assalamualaikum.
You again.
Thank you so much, Mr. Muzaffar.
Thank you, Encik Helmi.
Yeah, thank you so much from Dr. Murniati too. Thank you so much for the webinar attendance.
So this is actually the webinar attendance records. And then if you would like to become a member, you can contact the administration as well. So see you inshallah. Thank you, Ratna. Thank you,
Thank
Sister
you.
Rosita. Assalamualaikum.
Waalaikumsalam warahmatullahi